Determining U.S. tax residency can be complex, especially if you spend significant time in the United States or have ties to the country. Understanding your tax residency status is very important because it determines your tax obligations, including whether you need to report your worldwide income to the IRS. U.S. tax residency isn't just about where you live, it's about meeting specific criteria set by the IRS. There are 3 primary tests the IRS uses to determine whether you are a U.S. tax resident: the green card test, the substantial presence test, and the closer connection exception. Let's start with the green card test. If you have a green card, you're automatically considered a U.S. tax resident, regardless of how much time you spend in the U.S. This means you must report your worldwide income to the IRS, just like any U.S. citizen. Next is the substantial presence test, which is more complicated. This test applies to non-U.S. citizens who do not hold a green card. The IRS looks at the number of days you've been physically present in the U.S. over a 3-year period. Through the use of specific formula, you meet the substantial presence test if you were in the U.S. for at least 31 days in the current year and 183 days over the last 3 years. The formula works like this. You count all the days you were present in the U.S. in the current year, 1/3 of the days you were present in the previous year, and 1/6 of the days you were present in the year before that. You're considered a U.S. tax resident if the total equals 183 days or more. It's important to note that not all days spent in the U.S. count towards the substantial presence test. For example, days when you're in the U.S. for less than 24 hours, days you're commuting from a neighboring country like Canada or Mexico, or days you're in the U.S. as a teacher, student, or foreign government employee may not be counted. Even if you meet the substantial presence test, you might be able to avoid being classified as a U.S. tax resident if you qualify for the closer connection exception. This exception applies if you can demonstrate that you have a closer connection to another country and that you were present in the U.S. for fewer than 183 days in the current year. To qualify, you must prove that your primary home is in another country and that you maintain significant contacts there, such as a permanent home, family, and social ties. You'll need to file IRS Form 8840, also known as the Closer Connection Exception Statement, to claim this exception. However, this can be a complicated process, and failing to meet all the criteria can result in being treated as a U.S. tax resident. Cardinal Point helps clients navigate the intricacies of U.S. tax residency rules, understand their status, and avoid potential pitfalls. So what happens if you're determined to be a U.S. tax resident? Being classified as a U.S. tax resident means you must report your worldwide income to the IRS, including income from foreign sources. This can include wages, dividends, interest, rental income, and more. Additionally, as a U.S. tax resident, you may be required to file other forms, such as the FinCEN Form 114 to the Department of the Treasury, as well as an 8938 to the IRS because of your foreign accounts. Failing to file these forms can result in significant penalties, so it's important to understand your obligations. If you're a U.S. tax resident but still have financial ties to Canada, you might also need to navigate the Canada-U.S. tax treaty to avoid double taxation. This is another area where Cardinal Point can assist you in optimizing your tax situation and ensure compliance with U.S. and Canadian tax laws. Determining your U.S. tax residency status is crucial for anyone spending significant time in the United States or maintaining ties to the country. The rules can be complex, but you can navigate them confidently with the right guidance. At Cardinal Point, we specialize in helping individuals and families manage their cross-border tax obligations, ensuring they stay compliant and optimize their financial outcomes. Our firm has offices in both Canada and the U.S. and serves clients on both sides of the border. Our advisors are legally licensed and registered in the jurisdictions where our clients reside. If you find this information helpful, don't forget to like, share, and subscribe for more insights.